MSCI revealed this morning that a total of 234 A-share stocks will be included in its flagship Emerging Markets Index. The inclusion will take place in two stages, first by the end of May and the rest by the end of August. Starting May 1st, the Chinese government expanded the daily trading quota through the Shanghai-Hong Kong and Shenzhen-Hong Kong connects by 4 times. Data from Bloomberg show that in April alone, northbound investment through the Hong Kong Stock Connects into China's A-share market reached a record of 40.5 billion yuan. And in the first 8 trading days of May, the total foreign investment on the Stock Connects had already reached 42% of the April figure.
One of the concerns previously for the MSCI to include the A-share into the stock indices is because of the capacity and the visibility of opening up. So increasing the daily quota limit is actually a very good sign that the government is very proactive and listen to the market participant. So this is a really good sign.
The stocks chosen for the MSCI index have a combined market capitalization of $22 billion and will represent a 0.78% weighting in the index. They come from a broad range of sectors, including banking, real estate, consumer goods, tech firms, and healthcare. Those were just the sectors into which foreign investors had been putting their money anyway.
For example, the domestic consumption story is a very powerful one, and it's a growth story. When global allocators invest in the China market, we believe we are looking for growth and not value. And the second point is consumption sector is relatively speaking less correlated to the global economy. So from a global allocator perspective, it's rather sticky and more long-term.
Still, Shanghai investors expect MSCI inclusion will begin to change the nature of China's stock markets.
This is a very meaningful event. Before this, our stock market had been driven by individual retailers, which means they trade on speculation and concepts. In a mature market, investors value performance, liquidity, and growth. More foreign investors coming in will definitely help change the investment style in the A-share market.
Ma says the overall valuation of China's A-share market is still only 2/3 that of the U.S. market, which makes it very attractive to foreign investors like his company. It is expected that the amount of foreign capital entering the Chinese markets will only continue to grow after the MSCI inclusion. Mi Jiayi, ICS for CGTN, Shanghai.